Hi everyone, welcome back to Level Up with Dawn, where we discuss investments, real estate, entrepreneurship, and business. And I sort of take you guys through, talk you guys through, and also, I guess, brainstorm with you guys how I'm going to be building my wealth for myself and for generations after me. Today, we're doing another investment diary. It's late, as you can see. But I wanted to just get this out. If I'm just looking at my phone because I have like notes that I want to talk about. But one thing that I was like really excited about, because remember last video, I was talking about the first cuts to come from the West. And it happened with the ECB, it happened with Canada. Um, so I was like, oh, this is happening like so fast. I hadn't really had time to like position myself because I mean, obviously, like, we're not swimming in cash, so it's like we have to be steady with these investments. Um, but one thing that I think, um, one thing that I think is working to my benefit is also the elections happening there, like in the Euro area. I think also France, because I think then like the full upside of like that cut that I talked about hasn't been realized yet, I don't think. So I think I have time to like, decide like those read players. Um, but also not just read players. So this week I got into the Foschini group and like I'm mad because I've wanted, like, they're on my wish list, but I forgot about them. And they had results last week, so I'm mad that I didn't buy them before the results, because that upside. And also they declare dividend, and when they declare dividend, I think like some of that gets now added into the price because you're paying to participate. Because I've seen, if I'm not mistaken, I've seen like as soon as it goes ex dividend, that means when you buy the share, you're no longer gonna participate in that dividend. Um, the price drops. It has a drop. So like I think maybe even like, I don't know if this is a thing, but I think it would be so easy to program a computer to just track ex dividend dates and like do some sort of algorithmic trading around that. But anyway, um yeah, maybe they already are. Like, there's nothing new under the sun. Um, but yeah, so I got into TFG, and like TFG also has a UK presence. So I'm thinking like, okay, also the consumers about to benefit because of these cuts, and um, these retail consumer companies, although they're going through something, they sort of at the bottom of their cycle. So it's like kind of like there's only upside from here scenario. Of course, there could be downside. Like there's so many things up in the air. If you're South African. Um. So yeah, I think I don't know. I don't know. I don't know. I don't know if I want to do more. I don't know if I want to do more. Is what I'm saying. But I'm happy I got into TFG finally. I also got into um Rhodes Food Group, which I think is the only food manufacturer I'm in right now. Yeah, only because I use their stuff. Like that's one thing that I realized. Like I use their stuff. And I think like that's a really good strategy too. Like buying shares and stuff that you use every day, because at least you're a customer, and then maybe people like you. Um, so I got into that. Not eyeing anything else at the moment. But then I did also learn about retail savings bonds. And I want to look into that a bit more because the returns there are quite good. But the problem is the time span that your capital is held up. I think I may need to do an extra, like a separate video, just like a proper like, what is this? But the returns are really good, and it's a government bond essentially, so risk there is a bit less. So we'll see. I don't know. Yeah, I don't know, because even if I had like enough capital to make it make sense, I don't think I would want to tie my money up there. I don't know, but it's like the returns are good, so I wanna like, I know it's a tool I can use to diversify with, and which is why like I'm holding on to it so much. But I'll see. I'll see. Um, what else did I want to say? Yeah, that's pretty much it. I'm excited for tomorrow because then we'll know like what's happening in South Africa. Well, at least we'll know who's driving the bus. And then I don't know, what am I thinking? Oh, I was thinking like I really do think I want to like just do the share thing because like I'm having a lot of fun like focusing on finding good tickers, and so like I don't know, and it's like right now the returns on shares are making more money for me. Like I'm getting higher returns from shares than I am from property. And also I can invest in property stocks. So it's like I'm still in property, but I'm diversifying because like I've bedded down physical assets. Yeah, and I can invest in property stocks. So yeah, I think I'm just gonna like go that route for now because it's really fun, and I think also I like the instant gratification of it. Only to say like you can realize your returns are much faster, or you can realize and monitor your returns more easily. And I like just watching those numbers. Like it's helping me even just learn about the market, and seeing what's down when something's up, and vice versa, and seeing what changes because of certain pieces of news or certain times of risk that we are in. So yeah, but yeah, I think I'm gonna like paying off the debt is definitely still a priority, but I definitely do want to ramp up on the shares. So we'll see. But yeah, I hope this video helped. Um, if any one of you wants to learn more about investing, property, entrepreneurship, please subscribe to the channel. If you like this video, give this video a like, and I'll see you in the next one. Bye.